It's very clear to me that when we, weaponized the dollar with the seizure of the Russian assets, we kicked off a BRICS trend towards net settling trade in gold. And that's part of the reason why gold is hitting the highs that it's hitting. And I think it's a trend that's only going to continue. It's going to run many, many years. So, I think it's interesting. I mean, until very recently on Bloomberg, all the projections by, most analysts were that gold was going to trend back down to 1900 or 2000, which is where it was before this breakout. And I think the odds of that happening are very, very low, if not zero. Personally, I think gold's going to 3,000, 4,000, 5,000 over the next few years. I mean, at a minimum, it'll be 2,500 to 3,000. So, and in that instance, the silver and gold miners are going to do extremely well. I mean, we don't have the first quarter, the higher prices weren't all the way in the first quarter. Gold didn't break out until the last part of the first quarter.
With extensive experience in finance, LawrenceLepard, founder of Equity Management Associates, provides valuable analysis on market shifts. Regarding precious metals, he anticipates a decade-long bull market for gold and silver stocks as they are expected to double or even triple in value within the next 12 to 18 months due to higher metal prices. The gold market is holding recent gains and remains within striking distance of this week's all-time highs as the U.S. labor market sees a significant drop in momentum. With gold prices expected to increase further due to a demand-supply imbalance, companies like Agnico Eagle Mines, Franco-Nevada Corporation, Royal Gold Incorporation, Eldorado Gold Corporation, and New Gold Incorporation are well poised to capitalize on this. Their strong balance sheets, efforts to lower costs, and growth initiatives back them up. The discussion shifts overseas to Japan's economic situation, with analysts predicting that gold will reach new all-time highs due to Japan's shift towards purchasing oil in yen instead of dollars. Concurrently, Lepard highlights a shift towards settling trade in gold, driven by the West's weaponization of the dollar. This move by BRICS countries raises gold prices despite falling ETF demand in the US and UK, a trend he expects to continue for years. The demand for gold, which comes despite a sharp rise in the price of the yellow metal this year, highlights how allocations to the dollar have been declining as central banks have sought to diversify their holdings through alternative currencies and assets, especially after the US weaponized its currency in sanctions against Russia. Based on his observation, Lepard predicts that a significant shift of 5 to 10% of capital from the S&P 500 to gold and silver mining stocks will occur once these stocks start outperforming, given the current disparity in market valuations. Now, we present the clips of LawrenceLepard's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I think that's right. And it's very easy to sometimes not necessarily look around the world. And China's got a lot of problems. They've been growing their money supply even more rapidly than us. That's another chart that's in my letter. They got a lot of political problems and so forth. And more particularly the one I think we talked about that really is worth focusing on, because I think it could be kind of a canary in the coal mine, and that's Japan. The Japanese have been leaders in this zero interest rate policy and this growth in debt, and they've gotten away with it because they had a culture of saving in their country, and they also had a positive trade balance, which we don't have. But, as we've all now noticed, the Japanese yen has really started to fall, and it's broken through a critical level at 160. And Japanese interest rates have started to go up. And, this is problematic. And Japanese inflation has started to go up. They had very low inflation. Last reading I saw was close to 3%. And so, this is all starting to become a problem for them, in particular because they have to import a lot of oil. They don't have any natural, oil on their own. And they used, because of the US dollar system and the petrodollar, they had to buy that oil in dollars until very recently. And now there's beginning to become evidence that suggests that, the Middle East is going to sell to them in yen. And to the degree that they don't use that yen to purchase Toyotas or other things that Japan makes, they'll just net settle in gold. Which, by the way, is another huge trend that's taking place right now. I mean, to me, it's really enormously interesting that gold is hitting new all-time highs, and that ETF demand in the West, in the US and in the UK, is falling. All this demand is coming from the East, from the Far East, and it's very clear to me that when we weaponized the dollar with the seizure of the Russian assets, we kicked off a BRICS trend towards net settling trade in gold, and that's part of the reason why gold is hitting the highs that it's hitting. And I think it's a trend that's only going to continue. It's going to run many, many years. So I think it's interesting. I mean, until very recently, on Bloomberg, all the projections by most analysts were that gold was going to trend back down to 1900 or 2000, which is where it was before this breakout. And I think the odds of that happening are very, very low, if not zero. Personally, I think gold's going to 3,000, 4,000, 5,000 over the next few years. I mean, at a minimum, it'll be 2,500 to 3,000. So, and in that instance, the silver and gold miners are going to do extremely well. I mean, we don't have the first quarter. The higher prices weren't all the way in the first quarter. Gold didn't break out until the last part of the first quarter. But I think we're about to be shocked by some of the earnings on these miners. I mean, the second quarter, the average price of gold, I think, was close to 2,400, just below it, maybe 2,370 or so. And when that filters through, the mining community and all, we're going to have some blowout earnings in these miners. It's going to wake some people up, in my opinion. When a debt defaults, that does, destroy that capital. The money goes to money heaven, and there will be a lot of that. We're seeing that occurring right now in commercial real estate, right? But it's really more a matter of what'll happen. The remaining capital that's still out there, the stocks, bonds, et cetera, I believe will rotate, and the allocations to gold and silver miners are just so extraordinarily low, and the entire sector. We've got a $130 billion U.S. stock market, and the entire gold sector, the ETFs are I'm sorry, when I said 130, I meant 130 trillion, not billion. The ETFs are a couple of trillion, and all the stocks put together are maybe a trillion. So, but those, all that allocate, all those, the 130 is all allocated to the S&P because the S&P is working, and people don't get fired for buying the S&P index. Wait until the S&P index breaks and it starts to not perform well, and wait until the gold and silver mining stocks beat the S&P convincingly for a couple of years. And these S&P stocks aren't performing so well, and those gold stocks are doing extremely well. We're going to shift our balance and buy more of those. So. And that's what will happen. I mean, but right now everybody's still infatuated with a shiny object, and the shiny object is Nvidia and the S&P hitting record highs.
During the interview, LawrenceLepard mentioned that silver mining stocks are currently the most promising investment due to the significant suppression of silver prices and strong industrial demand. He anticipates silver could reach up to $100 within a couple of years, resulting in substantial profits for mining companies. Silver was initially followed by gold, which rose higher in the March to May period. However, the gains in silver have outpaced gold nearly 2-to-1 in 2024. Silver has risen nearly 30%, while gold has only gained 15%. As of April, managed money positions in silver had climbed to their highest level since May 2022, and exchange-traded product holdings rose to their highest since July 2023, as outlined in the Silver Institute's 2024 World Silver Survey presentation and report. Furthermore, Lepard expresses confidence that gold stocks will potentially yield returns of 3 to 20 times the investment. While acknowledging the challenges in mining, he believes now is a key moment to buy, given current low prices and improving margins. Let's get back to the interview.
We don't know the path, Tom, but we do know the general trend, and we do know that, yes, and we know that because of the math behind it. I mean, it's compelling math. I mean, the debt, and you look at the curves on the debt, you look at the curve on the interest expense, and it truly is a perfect example of Stein's law, which is if something cannot go on forever, it will end. And so yeah, I sometimes I tire of just trying to figure out which move they're going to make, and are they going to cut or not cut, and is it 3 cuts or 8 cuts? I mean, it really almost doesn't matter. My time, I think, is more productively spent on trying to figure out which form of sound money I want to hold at what period of time, and how I want to balance my sound money holdings between gold, silver, Bitcoin, and gold and silver mining stocks, which I happen to see right now as probably being the most asymmetric bet. I mean, I think the silver mining stocks right now look better than absolutely anything out there. I mean, silver has been massively suppressed. It tends to outperform gold in bull markets. We're entering a bull market. It's got two pieces of demand. It's got the monetary demand, which is somewhat less than gold because it's been demonetized to a degree, but it's also got enormous industrial demand. We've been running a deficit for years, and solar use is growing for silver. To me, my target is $75 silver, $100 silver within a year or two, and I've got companies that are mining 3 million ounces of silver at a $20 all-in sustaining cost. And, guess what? At $100 silver, those companies are going to have profits that are just going to be out of this world. And so, to me, as I look across my portfolio, probably the one area I'm most excited about are my silver stocks. I see 5, 10, 15 baggers laying all over the place. So, I mean, if we look at historical examples of this, gold broke out first, silver follows, but silver will go faster and higher. And so with each wave, I look at gold as kind of the kickoff event, and then I look at the silver follow through. Silver's going to outperform gold, but it's also going to be more volatile. And so in my opinion, we are in we're in the heat of it now. I mean, if you're looking at buying gold stocks, I mean, to me, now is probably your last opportunity to buy them close to cheaply because they're about to get a lot more expensive. I mean, I fully expect the GDXJ will double in the next 12 to 18 months, and probably the GDX will come close to that. And that's just because of the, higher metal prices and the larger earnings and multiple expansion. I mean, you really had kind of a perfect storm, Tom, of, the ASICs, the all-in sustaining costs were rising for the last 3 years. Expectations of future metal prices weren't going up. So margins were getting squeezed. And, you had very, very low multiples. And so, if you've got a company that can grow its production, and then the margin is growing because you're selling gold at 2,500, not at 2,000, and your ASIC's gone up 11%, which is still an increase, but not, as much as the price of gold went up. And then you get multiple expansion. I mean, I've got companies trading at 3, 5, 7 times, 6 times cash flow, and we all know that in bull markets for gold stocks, they can trade at between 9 and 20 times cash flow. And so, we've got a lot of stocks that are going to be, 3 to 20 baggers. And, but having said that, there are periods of time when they do work and they work extraordinarily well. And those periods of time are when the metals prices are, when they've been beaten down and they're relatively cheap compared to the assets they hold in the ground, the silver and gold that they own in the ground. And when, the price of the metals are going up very, very quickly and the alternatives like the S&P don't look good, then gold stocks just crush it.
Significant investment opportunities are on the horizon with the anticipated rise in gold and silver prices and the ongoing shift in global economic dynamics. How do you adjust your investment strategy in response to the predicted growth in gold and silver markets? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.